Question 30. A partnership of attorneys in St. Louis, Missouri area has the following balance sheet accounts as of January 1st, 2018. So based on this balance sheet, we know currently they have 3 attorneys, Athos, Porthos, Hermes, and also we know their current capital balance. According to the article of partnership, Athos is to receive allocation of 50% of all partnership profit and losses, while Porthos receives 30%, Hermes 20%. Okay, and that's how we are going to split the loss and profit among 3 of them. And then we have like a few questions. Each question are represent an independent situation. Okay, and question is kind of asking us to calculate what's their ending capital balance after new partners join them. Okay, so let's have a look at the question A. A is Porthos, with permission of the other partners, decides to sell half of his partnership interest to D'Artagnan for $50,000 in cash. No asset revaluation or goodwill to be recorded by the partnership. Okay, so right now we have 3 partners. We know their current capital balance, and Porthos decided to sell half of his partnership interest to D'Artagnan and for $50,000. So it doesn't matter how much they sell it for. Its current capital balance is $70,000, and he's going to sell half of it. So half of it is $35,000, right? So $35,000 is going to be given to D'Artagnan. And so new balance is going to be $80,000 for Athos, $35,000 for Porthos, $50,000 for Hermes, and $35,000 for D'Artagnan. Alright, so that's the new balance. Question B. All 3 of the present partners agree to sell 10% of each partnership interest to D'Artagnan for a total cash payment of $25,000. Each partner receives a negotiated portion of this amount. Goodwill is recorded as a result of the transaction. Alright, so because each of the present partner agreed to sell 10% of their partnership interest to D'Artagnan, which means that D'Artagnan is going to get 10% of the total partnership interest for the total payment of $25,000. So we can do this question backward with this schedule. So D'Artagnan in total is going to spend $25,000, which means that $25,000 is going to be his capital balance. And $25,000 is here. $25,000 will be 10% of the partnership interest, which means that the total partnership capital balance should be $250,000. So that's 10% of this $250,000 is going to be $25,000. So that they equals. Okay, so we do it backward. So right now we have 3 partners. Their current balance is this amount, and in total that's $200,000. We compare these 2 numbers, we can see that there is a $50,000 difference. So which means that we have to reevaluate this partnership and to assign this $50,000 as a goodwill and assign them to individual partners. And so the way we allocate the $50,000 goodwill to the present partners based on their predetermined allocation schedule, which means that 50% will be allocated to Athos, 30% given to Porthos, and 20% will be allocated to Hermes. And then we'll get their individual balance. And also remember that each of them is going to sell 10% of their partnership to D'Artagnan. So then 10% of the subtotal for Athos, 10% of the subtotal of Porthos, and 10% of the Hermes will be given to D'Artagnan. And so that's D'Artagnan is going to how we get the 25% for D'Artagnan. Well, for the other partners, it's going to equal to its subtotal amount and minus the amount is going to be allocated to D'Artagnan, and the new balance is going to be 94,500 for Athos, this amount for Porthos, and 54,000 for Hermes. Okay, so then let's move on to question C. Dassaulnian is allowed to become partners with 10% ownership interest by contribute 30,000 in cash directly to the business. The bonus method is used to record this admission. Okay, so let's start with the current balance. Current balance is in total to 200,000, and Dassaulnian want to contribute 30,000 to get 10% of interest. So after 30% is given, is contributed, the total balance is 230,000. Okay, so 230,000 means 230,000. Alright, so well, by looking at these numbers, you can see that 30% is more than 230,000, which means that we have Dassaulnian need to give some of the difference go back to the present partners. So 10% of the 230,000 is actually 23,000. So that's 10% of the total balance, which means that there's going to be a $7,000 difference. This is the bonus that the new partners want to give to the existing, the present partners, so that they can allow him to join the company or the partnership. Okay, and we will allocate the 7,000 to the present partners based on their predetermined allocation schedule. 50,000 goes to Arthos, 30% goes to Parthos, and 20% goes to Hermes. Okay, so then we can get their annual balance of for each annual capital balance for each partner that equal to is beginning balance and plus the additional bonus given by the Dassaulnian. Question D. Use the same facts as in requirement C, except that the entrance into the partnership is recorded by the goodwill method. Okay, so based on the same information from question C, which means that we still have these three present partners. So these three partners. Their current total balance is 200,000, and Dassaulnian want to contribute 30,000 to obtain 10% partner interest. So we are going to use a goodwill method, which means that we need to reevaluate the company's value. So 30,000 for 10% of 230,000. It looks like they overpay, kind of overpay, because 10% of that is only 23,000. So which means that company is undervalued, and then we can create equation. So 30% of the Dassaulnian's contribution equal to 10% of the fair value of the company or partnership, that equal to 230 plus this X, and this X is going to be the goodwill amount, and we can solve this equation and get goodwill to be 70,000, and that actually this 70,000 over here. And next we need to allocate the 70,000 to the three present partners based on their predetermined schedule. 50% goes to Arthos, 30% goes to Parthos, and 20% goes to Hermes. And then each of them is going to have a new capital balance. For Arthos equal to its beginning balance plus the allocated goodwill equal to 112,000. So Parthos new balance 91, Arthos 64,000. Dassaulnian is going to be 30,000 in total. Okay, so then let's move on to question E. Dassaulnian is allowed to become partner with a 10% ownership interest by contributing 12,222 in cash directly to the business. The goodwill method is used to record this transaction. Okay, so also let's start with the present partner's balance. That's 200,000 in total. Dassaulnian will contribute $12,222 cash to get 10% of the partner ownership interest. So after the Dassaulnian's cash contribution, and the new total for the company's capital balance is 212,222, and it looks like Dassaulnian does not pay enough for 10% of that total capital. What normally it means that Dassaulnian can bring in some goodwill to this company. Goodwill here normally means Dassaulnian's human capital or his talent. So which, let's assume that the amount of goodwill can bring in by the new partner is X. Okay, and then we can create create a new equation for this situation. So D'Artagnan's total contribution will be its cash contribution and plus the goodwill brought into the company equal to 10% of the total capital balance of this company. That's the subtotal and plus the goodwill. And then we can solve the equation and get X equals to 10,000. So so the present partners are going to maintain their current capital balance, and D'Artagnan's total balance will be the cash contribution plus the goodwill contribution. In total, that's $22,222. Okay, so that's the solution for question E. Let's move on to question F. Hermes decided to retire and leave the partnership. An independent appraisal of the business and its asset indicate the current fair value of $280,000. Goodwill is to be recorded. Hermes will then be given the exact amount of cash that will close out his capital balance. So start with their current balance, that's in total 200,000. So there is a appraisal and indicate that the fair value of the partnership is 280,000, which means that the difference is 80,000. So this is re-evaluated appraise, and this is a goodwill. First, we need to allocate the goodwill to the current partners based on their predetermined allocation schedule. 50% gets allocated to Arthos, 30% goes to Porthos, and 20% goes to Hermes. So the new capital balance will be 120,000 for Arthos, 94 for Porthos, and 66 for Hermes. So that's their beginning balance plus the additional goodwill. And then Hermes want to retire, and then which means that he is going to withdraw the 66,000 out and to close its own account. Well, for the other two partners, they are going to maintain their current capital balance, and Hermes is going to have zero balance when he retired.